What is going on with markets? It looks like everything is going down. We got stocks going down. We got crypto going down, all because Elon won't stop tweeting. But what's new? We got inflation coming that people have been scared about for months now, but the Fed doesn't really care. So our question, of course, is how long is this going to last? Are these crashes going to get worse or will we recover? What's going to happen? And that's what we analyze every week in these videos because, you know, our number one rule here is risk management. That's how you become long-term successful in the stock market. So in this video, like we do every week, we are going to analyze the market to figure out where things are headed from here. And I'm even going to tell you the signal that our macro algo just gave us. So you're going to want to stay tuned for that as well. Oh, and we also got an industry that we're looking at too with the stock pick because everyone loves stock picks. And as always, we're going to go over the research from Macrops, which is our global macro research and consulting firm. Just in case you forgot, I remind you all the time. First up is a little note from Morgan Stanley that's pretty interesting. They said in past cycles, a good comparison to this year is 94, 2004, and 2011. So they think that 2021 will be very similar to those years for investors, which means pretty much flat returns for the year with a 10 to 20% correction along the way, which we might be facing right now. This is not pretty. This is just garbage action. But this is also what you can expect in a volatile market. Everyone just gets chopped up both ways. So while the market may finish flat at the end of the year, a lot of investors may finish down because of these swings up and down. So during periods like this, the game is to be more selective with your investments and even more tactical with the rotations under the surface. Now, the other thing to remember is that we're still only a year from the trough in the recession, and new bull markets tend to last for years. So whatever correction the market experiences this year, we are likely to make higher highs next year. So this is important here. You always got to establish your time frames. So when we're talking about a correction like the one we're in now and what might continue from here on, we still got to remember that it's within the context of a larger bull market. So if you've been watching our videos every week, then you know that our theory was a buy climax with a drawdown and sideways action. But then after that happened, we were saying that the bull trend would resume. Why? Because the number one factor of how the market is doing is how the Fed is doing. And we know that the Fed is pumping money nonstop. And not only that, but they changed how they're going to operate the entire economy. There's a huge change last year and this year. They decided that instead of doing what their normal job is, which is when the economy overheats to bring it down, and when it's struggling to bring it back up, they decided that, hey, when the economy is running hot, we're going to make it run hotter. Which is why we were just talking about inflation, right? And everyone worried about it. Well, the only people who aren't worried about it are the Fed because they don't care. They're going to keep those interest rates low and they're going to keep pumping the money. So it's a big, massive change, which is why when we talked about the buy climax and the sideways action correction, it was still, again, within the context of a broader bull trend, which is exactly what Morgan Stanley is saying here. Now to recap what we're talking about with a buy climax, this is a chart of the S&P right here. We expected it to really take off and get that final vertical move higher before turning around. But then crypto happened, Dogecoin happened, and everyone took their money out of stocks and put it straight into crypto coins, which had the effect on the stock market of dampening that buy climax. So the best place to see that really is in the NASDAQ. I mean, you didn't really get the buy climax here because growth stock got hammered. And what happened is that all the speculation in the stock market flooded to crypto because it's really no different to people that are speculating. You got a 3-letter symbol over here or a 3-letter symbol over there. Who cares? Which one is more volatile where you can make a ton of money on? Where can you get Doge-like returns? But we'll talk about this more in a second, but speculation is the most important part about this. So when we look at this chart, it looks as though the buy climax might be over, and instead of going out with a bang, it went out with a whimper. And now we're going to see this sideways action. Here's a note from Bank of America about inflation. They said it's hard to even imagine a wage spiral tail risk. It would take steady wage gains of 10 to 12% to push inflation to the levels of the 70s and 80s. And when people are scared about inflation, they're always thinking back to that 70s and 80s period, where inflation was just through the roof and things got really crazy. But nowadays, the US economy is structured very differently. Non-elite unions are politically toothless, and technology penetrates every industry. The offshoring of more services is coming. So because of these factors, we likely won't see wages take off, which is a requirement for that crazy inflation. Now, going back to equities, we think we're going to hit an extended corrective move of 1 to 3 months in duration. That's right around the corner. And why? Well, it's because of all the things we just mentioned. And the trend right now is getting heavy and it's unlikely to last much longer. So we already know the trend is broken down in the NASDAQ, right? But in the S&P, it still has a little bit of strength. But we're to the point where, you know, it's not going to hold up much longer. And this is the post-buy climax action that we're talking about. That sideways to lower action for the next 3 months. So summer is going to look a little rough. And you guys know that I use 2 specific systems, the All-Stars and the Alpha Rotation. So the All-Stars is our momentum system that I always talk about in these videos that's focused on the NASDAQ and those high momentum stocks. And then we have the Alpha Rotation, which is more of a macro system. So it uses different inputs and you're more trading the indices. So that system recently just gave us a sell signal in the indices, meaning we sold our stocks. And if you're an All-Stars member, you know we've sold almost all our stocks. And here's the benefit of having two systems that work off different inputs. Because the fact that both systems are almost all in cash right now tells me that the market is very unstable. And again, because they're two systems with two different inputs, it's coming from various sources. And that's what you do in the stock market. Even when we do these videos every week, we look at multiple different inputs because one input is not going to tell you everything. You got to look at the total picture. So it is definitely a time to get defensive, which we'll talk about more in a second here. Now, one trade that has been really great has been the reflation trade, which includes precious metals, so like gold and silver. So right now it looks like that theme is going to take a breather for a couple of months. But after that, precious metals will really accelerate into their next major bull leg. So I know a lot of you ask about what to do with your gold positions. Well, if you're longer term, you can pretty much hang out here, but it's looking like, again, sideways action. One stock we're looking at is Comstock Resources, CRK. You can see here that there are tighter and tighter oscillations happening within its 5-year wedge, and this is a very long pattern, massive 5-year compression. So this type of price action typically precedes large repricings. So this is one that you definitely want to have on your watch list. And remember how markets work. When you see a compression like this, what comes after that? An expansion. Now, whether that expansion goes up or down, well, that's where you kind of got to look at the fundamentals and see, hey, what is this company actually doing and does it have a shot? But that's all markets are. They compress and they expand, and they could expand either higher or lower. And that goes back to breakout trading is what you could call it. And now let's talk about cryptos a bit because they have been so crazy. And you know who made them crazy, right? It's Elon. If you guys remember, he tweeted this out last week saying that Tesla suspended vehicle purchases using Bitcoin. Why? Because they're concerned about the use of fossil fuels for Bitcoin mining and transactions, and especially coal, which has the worst emissions of any fuel. So all of a sudden, Elon realized the environmental impact of all these cryptocurrencies and managing the blockchain, which I know is debatable, but it's just a funny reason to announce when, you know, you're the forefront of sustainable and renewable energy, as if he didn't know about this before. So what really happened? Was it a meme that was taken too far? Did Elon maybe get in trouble with an authority so he had to backtrack what he was saying? So this news right here tanked Bitcoin and all the cryptos. But then it didn't stop, did it? Because this weekend, Elon started just tweeting at random accounts, like this one, Mr. Well, saying Bitcoiners are going to slap themselves next quarter when they find out Tesla dumped the rest of their Bitcoin holdings. With the amount of hate Elon is getting, I wouldn't blame him. Elon replied to this saying, indeed. So once again, he's hinting that Tesla sold all their Bitcoin, which once again moved the markets lower this weekend. This is the problem with 24-hour markets. You never get a break. Your weekends aren't free. Nothing is free. Then Elon had to clarify the speculation and said Tesla has not sold any Bitcoin. So what's the truth here? What did Tesla do? What is Elon thinking? We're never going to know. But it just goes to show you how fickle these markets are. Basically, the crypto markets treat Elon as like the Federal Reserve of crypto, which is just stupid because he doesn't have that big of an impact on it other than making it popular. But you know, it's already popular. But why can his tweets move the market so much? His tweets moving Tesla, which we all used to track back in the day, it seems so long ago now, that makes more sense because it's his company, right? But Bitcoin and crypto in general, why? Why the fluctuations? Well, I'll tell you why. It's because this whole thing is driven by speculation. And you guys know I definitely support cryptocurrencies and Bitcoin and Ethereum because they may indeed be good long-term investments and they do have value. But just because an underlying something has value doesn't mean that speculation can't infect it. And that's exactly what those markets are right now. And it's what the stock market was just a few months ago, right? And this is what happens in every market. You go through these bubble speculation periods and then it cools off and then it happens again. So the trick is to know what's going on though. Because if all these cryptos are rising and falling based off Elon's tweets, you know it's just stupid and you know it's going to be super volatile. So the way you play it is important. And I'm not saying not to play it, but you got to trade it and you got to have that risk control in place. The people who are trying to hold Dogecoin long term, it doesn't make sense. The only time it does make sense is if you understand that, hey, yes, this is a gamble and I'll either make a bunch of money or lose all of it. If you understand that, then the way in which people are playing the crypto market, maybe it makes sense. But the most important thing, again, identify what you want to do. For me, it's all about long-term wealth building. So I stick to one strategy and I keep executing year after year. And the reason I'm more focused on that is because I am playing with my life savings. Like it's bigger money. It's not just $1,000. And I know a lot of you watching this have the same idea because you don't want to put all your money at risk. And I talked with my friend about this. He's a financial advisor. I've told you guys about him before, but the truth is the more money that people get, the more stability that they want. So yes, everyone has been obsessed with crypto, but it's only with some speculative funds. So for example, one guy has 10 million and he says, okay, I have 40,000, maybe we could throw it in crypto. But realistically, for his millions of dollars, he's still keeping it in something more stable, something that has longer term returns in a strategy that should work year after year. So less speculation. And that's basically what we described in our video from last Sunday, which by the way, with our content schedule right now on this channel, we're going to be doing these market reviews every Tuesday, and then Sunday I'm just going to be answering questions. So the last question that I answered is, should you move all your money from the stock market to crypto? So if you guys have any questions like that, make sure to put it down in the comments and I'll make sure to make a video about it. We're not going to be chasing the news stories anymore like we used to because I'm just tired of it. I don't care because like I told you, I have the systems that I focus on and the rest of it is just noise to me. And if that appeals to you, then you're in the right place. And I'm excited right now because so many people are so down about the stock market. And I'm not excited because they're down, but I'm excited that the fact that, a lot of the speculation is going to clear out. And this is when a lot of people start breaking their strategy, they get rid of their systems, and then they end up screwing themselves. But it's during those times where when you stick with the system and keep adding money like you're supposed to, or whatever your financial plan says, the upswing is so sweet. And that's where all of a sudden you see a difference between your returns and everyone else's. Because the people who didn't stick through a cycle like the one we're going through now, the ones that broke their strategy, they get in trouble. They lose out on that upswing. And that's why so much of this market is psychology. That's why everyone who uses our all-star system, they go through a psychology masterclass that I made just to teach them about cycles and how to deal with them, because it gets tough. We've all been beaten up in this market. It doesn't feel good. Of course you want to take your money out, but the market doesn't actually care about your feelings. The market does what the market does, right? So for me, it's always an exciting time with our systems because it's like, yes, let all this clear out. Let me put more money in. Let me benefit off that upswing that will come. That's how cycles work. And I know this because I've done it long enough to not be shaken from them. And as always, if you want to learn how our systems work so you could use it yourself, just check out our free training right here. I'll put a link in this video and down below in the description and comments. Markets are getting tough. We're going to see this sideways action. We're going to see down moves. You need to have that system and strategy in place to protect yourself and to make sure you're in the right position to benefit as well. So again, if you want to check out that same strategy I use and all our Fallible members use, click this link right here. It'll take you to a free training where we'll teach you exactly what to do step by step. So click here and I will see you in that training.